Hello and welcome to Wyckoff Training Academy. Kamal, this is this session is especially for you to make you understand how these indicators work and how one has to uh, find trades. So now, Kamal, I'll keep this indicator very precise and short, so you don't get any sort of confusion. So let me start my share again. Okay. So you asked me about FCPO. Will it work in FCPO or not? Look, there are three indicators which you would be getting. One is top bottom. Second one is Wyckoff all in one, wherein you would be getting this ribbon and this blue imbalance, volume imbalance area. Third indicator would be 155 version, wherein you would be getting automatically support resistance are drawn. So these are the things which you would be getting. And you'll get 5 videos in like that after making the purchase. You will on a daily basis you would be getting 5 consecutive days. You will be getting 5 videos wherein I would be explaining how to use this indicator and how to take the buying and selling decision. Okay, so this is how it's gonna be, and it's gonna be a very wherein you would be taught two trade setups of buy and sell and exits, your stop loss, and the targets would be covered. So now, for example, you ask me straight away, I'll remove this thing. This is the dashboard, which is a part of version 155. So analysis dashboard. Reason I'm using 5 minute chart is because uh, to prove the point that if my system works on 5 minutes, then automatically and gradually it will work on higher time frames. So here, what happened? We've got a top bottom formation. Whenever this line goes below this red line, green and red line goes below the this red line, and it comes back into, or it crosses above whatever the low between these 2 points of intersection would be. We would draw a parallel line, a horizontal line over here, and this would be a bottom. So what we are expecting out of this bottom is to price to come back and test, and then we would initiate a buy trade. If this is case one, another second case is price to go back and test, and it will break, and then 1 second. And second case would be price will break, come back, and test this level, and we will sell over here, and this is what we are expecting. So a bottom is formed. There are two outcomes of a bottom. Bottom is formed, price will come back, test, and then it should go upward. If that is not the case, then bottom would be breached, and it will be price will came back, will come back to the particular price level. It will hold, and then we will get a short selling opportunity or a buying opportunity. Simple and straightforward. This is what this perfect entry top bottom tool has to offer to us. And it is very, very, very effective. Like for example, you got one bottom over here, you got another bottom over here. Okay, on 5 minute. If I see this is the top, look at this top. Look at this price action. The highest point up here is this one. You got did we got any this kind of price action taking place from this particular point? No. You can make out like if I draw a horizontal line from this particular point, price, this was a top formation, and after top we got a selling opportunity, again a selling opportunity, and again a sell off. So this is how it has to be traded. But here we got a bottom, Here it was a bottom formation, and this bottom is correlated to this bottom, and this bottom I'm talking about. So price came back and then tested this bottom and formed a new bottom. Price came back up, tested over here. Here you would have bought, and this is would have been your the market is still going on. So this is how it has to be used. Now the second thing which comes into mind is version 185. So it comes with Wyckoff principles of price and volume. This is when nothing is applied. If you apply the price pullback which are taking place in terms of price and volume, this is just a ribbon. We only consider this as a graphical representation. What is important for us to identify the price pullback areas. So if the pullbacks are more than it is going to touch this line, and if it stands, and if there is a support at this particular point, then it will bounce back. Second, in this option, we have a low volume pullback. Low volume pullback is a price continuation trend kind of a thing, wherein in an uptrend we look for uh, low volume pullback and high volume pullback kind of pullback. Like for example, in this recent price action, this was the high volume area wherein price started from a downtrend, price started moving upwards, and then you can see now price is doing this, and it is here. Here also you can see it is an up move. It is an up move. It was in a down move, and then all of then we are getting high volume price upward movement that resulted in this one. So how to use this thing would be taught to you after you make the purchase, and you'll get the videos, 5 videos, how to individually deal with it and how to plan your trade accordingly. And if you don't want to use any these things, price volume, I normally use high volume and pullbacks. That's it. The reason for that is I want to see this side because this portion is absolute selling for me. This portion is absolute selling for me. This portion is absolute buying for me. You're getting my point. This portion, this candle is absolute buying for me. So I'm till that point, I'm not getting any heavy volume pullback. I'm into the trade. So there are many things, many ways we get into a trade or exit out of a trade. So that things would be taught to you through videos uh, on YouTube, so that you'll be in a better position to understand. Now, after this one, we have a tool called tape reading toolkit. This is a tool wherein uh, red candles with blue triangle means there is seller supply greater than demand, and when green candle with green triangles means demand greater than supply. So whenever supply is greater than demand, what as per Wyckoff, what we are expecting this to be a downtrend. Is called as normally referred as markdown. If demand is greater than supply and whenever the supply is coming, price is not going anywhere. That means it is holding certain level. The level was this one because there was a bottom formation over here and bottom formation 2 number here. So we are resisting. We are not going down at this particular point. That means we are about to go upwards. And whenever there is a healthy uptrend, the demand candles would look more in numbers compared to red candles, like over here. If this was a downtrend. We are seeing red candles. Now the thing is like there are once you buy this thing, I'm just giving you an overview. Once you buy this thing, you will get everything in detail. All the indicators they don't repaint. All the indicators they don't lie. There is the only point which you have to wait for is to closing of the particular candle. Once the candle is closed and the whatever signal is there, it would be there for till the time there is any data glitch from the data provider. And one more feature is this comes with the trailing stop loss. Now your question was where I would have bought, where I would have bought. So I'll show you this thing how I do my analysis. This is my bottom point, and then this is the pertaining. This is pertaining to this one. This is pertaining to this bottom. Okay, this price violation is bottom. Whenever the price goes below, and as soon as it comes back above this level, we have to find the swing low for bottoms. So and same goes for tops also. So this was the bottom. Now you ask me where would I have bought? Like you are getting confused with labels and this thing. I draw my label based on this one. This is my basis. This candle. See if this is a breakout or this is coming back into the range. This is a false breakout, a breakdown, and then price is coming back. It is hugging at this particular level. There is no whatsoever. Once I bought, this is my stop loss, and my stop loss is not triggered. And I got second entry over here. This is my second entry, and both the entries are in profit. So if you see from this perspective, the labels which I will teach you how to come with this one, how to do the assessment. So it is very simple. Any so if I draw the profit long position, this is my first point. I'm not stopped out, and this is the point you're getting on 5 minutes. So it is 1:1.3. And one last thing which I would like to add before ending this one, it works on any time frame. It works on any time frame, any market. It works on weekly, 15-minute, daily, monthly. No worries. It works on everything. Like for example, you had a top over here. You can see the top price came back. You got a bottom over here. This bottom. Draw a straight line from this particular point. And this was a buying opportunity for me from this point. If you are applying it on like 1 hour as a swing trader, you see the bottoms where first bottom was here. If you draw the line here, it held over here, then it has broken down. Then we got a bottom. Then here we are getting a top. Here you got a top. I'm talking about this top, breakout, test, and then price going up. So it gives you a very fair idea how bearish side has to play. And these are all based on Wyckoff principle of demand and supply. Now, the only reason we are using this ribbon is to get rid of drawing manual structure when it comes to trend line and support resistance. So it gives us a crucial area where support or resistance is going to take place based on price and volume correlation and supply and demand. Because as per Wyckoff, if price is to go upward, then demand has to be greater than supply. If price has to come downward, supply has to be greater than demand. So hope this short video will make sense to you. Watch it. By tomorrow, I'm ending my sale with the sale price, and after that, you will not get. You'll have to pay like you'll not get it in like 350. You have to pay 2650. So hope this makes sense to you. Bye bye and good night.